Hi, I'm Scott Shellady here at the Seaman Group in London to do a quick bond commentary, that Treasury, that 10-year yield. Let's talk about that for a second. You know, I've been doing this a long time. The 10-year note's been something, or a 10-year yield has been something we've been looking at. And it just seems to me, and actually it's been proven to be the case, we've got too many people on one side of the boat, right? There's a record short out there that is expecting yields to rise. So a lot of people are short those bonds, and guess what? When you got everybody on one side of that boat, it didn't really kind of work out like everybody wants it to, and we've actually seen yields go lower, and we've seen bonds squeeze because we've just got this record short in that bond market that's starting to cause some problems. So let's take a look at yield levels. The short-term lows, 278-ish, I think, and the short-term highs, 311. Coming to tape here, we're around 282. We've been bouncing around the 285 level, but we're now starting to make a move, and there is talk doing the dealing rooms around London that maybe we're going to see that 10-year yield trade 275 or make a new low before we go back out to 3% after we get all those folks from, say, one side of the boat, maybe to back in the middle. So keep an eye. We're at the lower end of the short-term range here, and that could be some significant level. And then lastly, boy, these interest rates just aren't acting like everybody would have liked them to act. We've got, like I said, a lot of people on one side of the boat. That's not a good thing. And so we've seen all these yields kind of rally when we expected them to break. We have a big budget deficit because of the tax cuts and regulation reform. The government's going to have to borrow more money. What do they have to do? They're going to have to sell more bonds. Well, everybody got on that boat and got on that trade that, hey, we're going to have to sell bonds. Everybody gets short bonds. Guess what? It hasn't worked out. So that's something I want to keep an eye on. That's going forward. That we've thrown a lot at this economy, and it's just not happening the way that they would have liked it to happen. That dollar has gotten too strong, and in itself, that's been a tightening. So a strong dollar has hurt the market here a little bit, and that's why we've seen yields go lower rather than go higher. So that's a mouthful. It's going to change here in the short term, something to keep an eye on. And for right now, I'm Scott Shellady in London. I'll see you again next week.